Good morning, Mark Soderberg with ADM Investor Services with your morning ag market outlook. Happy Friday to all. Quiet trade across the ag space overnight. However, as we approach the pause, starting to firm up a little bit. Some green on the screen, 0.5 to 1 better in the corn, 1 to 2 better in the soybeans. Same with the wheat. Bean oil prices, they're down 5 to 10 points, while meal has firmed up about $1 or $2. Speculative traders, they were mostly buyers across the ag space yesterday by purchasing 10,000 contracts each in corn and soybeans, about 5,500 contracts in the meal, 3,000 wheat, while net sellers of a couple thousand contracts in the bean oil. That's 40,000 contracts of soybeans now in the past two sessions, pretty much wiping out what was starting to be a short position by the speculative traders. So either the speculative community feels that the odds of a trade agreement with China is becoming more likely, or that yields are just not holding up as harvest rolls on, or just given the uncertainty of it all, they just want out. Probably a little bit of both. Open interest yesterday did climb 3,000 contracts. Corn open interest shot up another 11,000 contracts. So here too, not just a case of a speculative short covering a rally. Of course, with the federal government shutdown lockdown now in day 3, there will be no CFTC commitment of traders data this afternoon. A Wall Street Journal report late yesterday stated the Trump administration, they're working towards an aid package for American farmers in the $10 to $14 billion range, using tariff revenue to fund the financial assistance. This is much lower than the $23 billion in aid the Trump administration provided farmers during the first trade war with China in his first term. President still plans on meeting with President leader Yi later this month at the APEC summit in South Korea, where the soybeans will be a major topic of discussion. S&P Global lowered both their U.S. corn and soybean production forecast yesterday. They knocked down their average corn yield nearly 4 bushels an acre to 185.5. Their production forecast at 16,707 million. That's down 107 million from the USDA forecast in September. Their soybean yield at 53 bushels an acre is down from 53.8, with production at 4,261 million. That's 40 million bushels below the USDA estimate last month. Harvest should continue to roll pretty much nearly uninterrupted through the weekend before scattered showers begin to fill in early next week. Heaviest concentration of rains will be in the northern plains and parts of the western Corn Belt, while lighter but more general coverage in the eastern Corn Belt. Temperatures to remain in a well above normal pattern through the middle of the month. Conditions to remain mostly dry in west central and northern parts of Brazil through the middle part of the month. I think something to keep an eye on as soybean plantings may start falling behind their historical average pace. Dees corn firmed up to a new high for the week. Next resistance comes in at the 100-day moving average at 424 versus the overnight high at 423. Next resistance beyond that is the September high at 431.25. Argentine plantings, they're moving along pretty quickly. The Buenos Aires Grain Exchange reported corn as 20% planted, up from 12% last week. Nova beans trading up also to a 2-week high. Next resistance there is a 100-day moving average at 1029.25. Inside trade for Dees oil overnight as it consolidates just above the 50-cent level. Meal also breaking out to a 2-week high with next resistance there at the 50-day moving average at 284.80. Wheat up a little bit, trying to carve out a third consecutive higher close. Russia shipped only 5.7 million metric tons of grain in September. That was down 28% year over year. Of that, 5.1 million metric tons was wheat. The Buenos Aires Grain Exchange reports 93% of their wheat in good to excellent condition. Thanks for listening, everyone. Have a great day and have a great weekend.